Do you really think the news and the headlines are telling the true story about Trump's tariffs, the economy, and the Fed? In this video, we're going to break down the GDP and why Q1 shrank, what the Fed is planning next, and whether Trump's pressure is really making a difference. And then we're going to break down and tell you what you can do to position yourself for growth in the stock market going forward. Should be a fun video for you here today. I appreciate you all for being here. One thing I ask, one thing only, smash that like button down below. If you want, you're also welcome to subscribe. We're at an all-time high for subscribers, so I appreciate each and every one of you. With that, let's jump into it. All right, let's take a look at where GDP stands right now. Okay, the latest data shows that Q1 GDP decreased 0.2%, and that's a sharp reversal from the 2.4% growth rate posted in Q4 of 2024. And it's really due to the significant increase in the imports that you can see right here. So with companies going ahead and importing all this product so that they're not hit with tariffs, which are paused until July 9th, there's many more imports that were imported. So that really hurt our GDP. So in fact, it kind of deflects from the true numbers. Our GDP increases when there's investment, consumer spending, and government spending, and exports, which you can see are very low. So Q1 earnings turned out to be pretty strong. So do we think that means everything's fine? Hold on. All right, this article talks about for Q1 earnings season, it's the uncertain outlook that really matters the most. And it talks about the first quarter earnings being a 6.8% first quarter earnings growth for companies in the S&P 500. According to FactSet, and I look at that all the time, FactSet Earnings Insight, it's a great report. There's a significant markdown from the start of the year when analysts forecast growth of 11.5%. So before all this tariff talk, I remember things were screaming and growth was expected to be 11.5%. So that's really changed. So it goes on, basically next quarter's guidance is anybody's guess. Stocks could sink further, but opportunities could emerge. Yeah, that tells us a lot, right? Key takeaways from this article, really the U.S. trade policies clouding the outlook, weaker earnings guidance for the rest of the year from these companies until this is resolved. And if tariffs are implemented as announced, they could weigh on companies' bottom lines. So revenues would decrease because of the tariffs. There's going to be lower revenues or increased costs, which will lower revenues for companies, and it's going to drive up the cost for consumers. All right, let's take a look at what's going on with President Trump and Fed Chair Jerome Powell. I think they're like best buddies. Okay, you can see here last week Trump met with Fed Chair Powell after his criticism on interest rates. It talks about how the two met on May 29th to discuss economic developments, including for growth, employment, and inflation. And as we know, the Fed chair's policy is to keep inflation in check and have employment grow. So those are his main concerns, and his job. It's not to lower interest rates when the president asks him to. So Trump repeatedly has asked the Fed leader, but backed off suggestions that he could have Powell removed. So yeah, he was talking about firing him, and I guess he's got the power to do that. They date back to his attacks on Powell, though. He's been doing this. It's his MO. He's been doing this since 2018. But he did later say that he's got no intention of firing the Fed chair. So he's just it's kind of the way he works. He likes to strong arm. And in general, the Fed cuts rates to stimulate flagging economy, and the job market. It increases interest rates or keeps them higher for longer to lower inflation. So if he's concerned about inflation, then he will want to keep them higher for longer. And Trump lashed out on April 17th, should have lowered rates in interest rates then. And let's see. If we go and we look at The Art of the Deal, this was an interesting article, and I read this book many years ago, but just talking about the way, I knew the minute he started this, what he's doing. He aims high and then keeps pushing and pushing. So he's kind of a pit bull. And he talks about how he won by wearing, with his real estate deals down, wearing the people down and finally just, getting it done. And he's got a lot of money and backing to do that. The media and critics can't be trusted, but generally he doesn't mind bad media. That just a lot of the time helps his cause. So let's take a look at what the interest rates are saying right now. All right, so here's the CME Fed Watch tool, and we can see June 18th is the next meeting, and the rates are expected to stay the same at 4.25 to 4.5. So 94% chance that they remain where they are and there's no cut. Going into the end of July on the 30th, still a 73% chance. So it's not until September that the first rate cut of a quarter point is expected. So again, higher for longer. There was already expected to be one a few months ago in June. So those have moved to the right to keep inflation and stagflation in check. Stagflation is just inflation with unemployment, rising unemployment. In October, still expected to stay at 4 to 4.25, and then one more in December. 40% chance of another quarter point. So they're looking at one in September and one in December, possibly. Let me know in the comments below what you think, if inflation's a concern, and what the Fed, you expect them to do with interest rates. Appreciate your comments. Thanks. All right, guys, so let's take a look at what's really going on with these tariffs. All right, I don't even know when this started. Seems like they've been going on for a while now. But what are the impacts of Trump's tariffs? Let's take a look. The automotive industry, they're talking about they could add $3,000 of the cost of U.S. manufactured vehicles and $6,000 to Canada or Mexico. I don't know where they came up with those numbers. I guess it depends on the price of the car, right? And inflation concerns, we talked about that. They warn higher tariffs can exacerbate inflation, correct? And those costs could be passed on to the consumers, or the companies can take the hit. So either way, it's not good. And some sectors like steel manufacturing have seen job growth, but others rely on imports and of components at reasonable prices from China and other countries, or they face layoffs and they reduce their production capacity. So on May 23rd, Trump announced plans to impose a 50% tariff on all imports from the EU, Europe, starting June 1. And then they started charging 25% on steel, aluminum, cars, and 10% on almost all other EU goods. He imposed a 125% tariff on some U.S. goods announced. Oh, this is China imposing on the U.S. I don't know that they necessarily have the leverage to do that. But Mexico, 25% on most Mexican products, Mexico products. Earlier this year, Trump announced 25% on Canadian imports. With energy, it looks like I know that we get a lot of energy from Canada, oil, natural gas. It takes a while to ramp up our U.S. Production as well, and there's regulations about that Trump's got to work through. Which tariffs are already paused by Trump? On April 9th, before various court rulings, Trump administration had temporarily suspended most new import duties for 90 days. The 25% tariffs on some Canadian, Mexican goods, plus automobiles, imported steel, and alumina. So there's been that April 9th 90-day pause, and that's when all these companies started importing everything in that they could to do it before that 90 days is up. And that affected the GDP negatively, and why we had 2.2% down. Later on, May 29th, the U.S. Court of Appeals and Federal Circuit granted an administration stay, temporarily blocking injunctions reinstating most of the tariffs. So yeah, this is a follow-on. So what happened last week is the courts blocked the tariffs and said they were not legal, and then Trump's and administration appealed, and now they're back in place. So I think it's going to take a long time to work out the tariffs. I don't think that helped his negotiation, but that's where we stand now. And what does it all mean? It really means uncertainty for the next few months. So with all this news, what am I doing? I'm staying in the market. I'm pretty highly invested. I've got some cash on the sidelines, being that the fear and greed index is up in the 60s, so still greed. But there's a lot of money on the sidelines, and it's in both the U.S.'s benefit and China and the other countries to get these tariffs resolved. And once that happens, I think the uncertainty goes away and the market skyrockets. Either way, I don't know how long it's going to take. I don't think anybody does. It could happen pretty quickly, but it could take several months. So what I'm doing is I'm utilizing poor man's covered calls, so long-dated leaps options, so that on any pullback, they don't get affected that much. And I'm buying them at 20% the cost of owning the stock outright. So they're a long-term play, and then I can sell short-term calls against them. And on those short-term calls, on any pullback, negative news, which this market's volatile and prices are moving up and down, negative news, I close out the calls, bank that profit, and then wait for the leaps to go back up. So really trading both sides of the market utilizing options. All right, here's my favorite trade that I've got on right now. I've got several positions. It's AMD. If we look at the chart, you can see it's trending down, but actually just started to move up, and the 50 days approaching the 200-day. You can see huge room to grow. 185, it was just a few months ago. My target's 200 easy. They've got a couple of chips, the MI 350 and MI 400, that are coming out that are going to drive growth through the end of this year and into next year and beyond. So love this stock going forward. This is the Tasty Trade option trading platform. There's a link down below. Check it out. Great option trading platform. There's benefits if you go through the link. And we'll go to the trade page, and I'm going to go out for a poor man's covered call by the leaps. I'll go to January right now, and the 105 calls are on the left, puts are on the right. We can buy it. Right here's buy. There's the sell. We're going to buy the 105 for $2,000, $20, and it controls 100 shares of stock, one option contract. So in order to control 100 shares or to buy 100 shares, it's $110 per share times 100 is 11 grand versus we're paying $2,000. So less than 20% for the same control of 100 shares. Now, we can go to the analysis page, curve mode, and you can see, just like owning the stock outright, as the stock price increases, if we get up to 150, we're at 31.87 at expiration. So that's 150% return on our investment. And I think it'll be up there, probably, I'm sure, I think this year. But let me know what you think of AMD and if you're trading it, and if you're trading leaps and poor man's covered calls, and what stocks that you're trading it in. But we can go back to the table mode. And what I'd like to do, we can close this option chain and then go out to the July. I like to use the regular option chains, and you can see right here, you click on the hourglass, we've got all expirations, so you can see the weeklies here. I like to trade the regulars, and they've got more option volume typically, but you can see the June is 19 days to expiration. That's typically when I want to roll to the next month, because volatility and time decay really accelerates during that the last 15, 20 days and lower. It increases as you get closer to expiration. So I like to trade between 30 and 45 days. So I'll go to the July, 47 days out, and we can sell the 120 strike. So that allows $10 up move from 110 to 120 that we can make money on the leaps. So that's huge, 10% gain on the leaps. And then at the same time, we can collect $335. So the $3.35 times 100 shares is $335, and you can see that brings our $2,000 cost down to $1,660. And then if we can collect $335 every month, we pay this off in less than 6 months and control 100 shares for free. So that's the strategy. We hit review and send and place the trade. All right, guys, be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. If you got something out of this video, be sure and subscribe here and watch this video here. It talks about the top stock and option trades this week. Thanks for watching. I'll see you in the next video.